Hi, everyone. Thanks for joining. I'd like to introduce Richard Kellam, CEO, and James Lorimer, CFO of DCM. They will present for 25 minutes, and then we'll have a Q&A afterwards. Richard, take it away.
Hi, thank you. Good afternoon. And one thing I've learned working internationally is I should also say good morning and good evening because we don't know where people are dialing in from. I'm Richard. I'm the CEO of DCM. I've got James Lorimer sitting beside me. You'll see him on camera in a minute, our CFO. I'm going to spin you through a deck pretty quickly so we have opportunities for Q&A at the end. So James, if you don't mind, just advance to the first slide. And we're going to really talk about how we're well positioned for growth as a company moving forward here. And importantly, why I've invested in DCM. So who is DCM? Look, we're a company that's been around for over 64 years, and we do a lot of print work for large, as you'll see in a minute, large enterprise clients in Canada. We're sort of the largest print provider, but we don't just do any print. We do a lot of what we call complex print. So think of high SKUs and low volume versus low SKU and high volume, right? Low SKU, high volume, anybody can do. A lot of SKU, so a lot of stock keeping units with relatively low volume, very few can do because that work needs to be managed. That workflow needs to be managed and needs to be optimized, right? Given the complexity. And on the right-hand side here, our strategy is to move from say a print first, right? So a company that kind of simplifies complexities for clients in the print workflow area to a company that continues to deliver that highly complex workflow, but through digital technology. And you'll see as we get into the deck a little bit, about 30% of our business currently is what we call digitally enabled. So it starts with technology, with digital solutioning to automate that workflow. So again, more of that when we get further into the deck. But think of us as a company that provides communication support. A lot of that is print, but highly complex, highly individualized communication. This takes us down to sort of the next level from where we were on the first slide, talking about our conventional print business, which is where we've been for 64 years, more into what we call tech-enabled marketing workflow. So that is, that's providing automation for that workflow. As I said, that's about 30 to 32% of our business currently. A lot of that will result in the bottom right. So it's digital automation that moves into print on demand. Some of it obviously flows into other digital services, right? So think of email marketing, so digital to digital. And then we do quite a bit of business process outsourcing, sort of managing supply chains for clients that have, a couple thousand retail outlets, for example. I'll give you more detail on that in a minute. On the far right is where we're going with a new business that we've just started to lean into over the last year. By the way, I joined the company on the 8th of March. So we just started down the path of building out a digital asset management software solutioning a business for clients. And I'm going to give you a few more details of that in a minute. Okay, so think of our strategy as conventional print moving into automated kind of management, digital workflow, and then a pure play on the digital asset management side, which will be, essentially 100% software, annual recurring revenue. Okay. That's a quick look at our client relationship. One of the reasons I joined this company is incredible client penetration. We're working with 70 of the top 100 corporations in Canada. See on the bottom here, 3 of the top 5 government agencies. About 250 clients represent 93% of our revenue, although we're working with 2,500 clients. And we've got a very high loyalty and retention rate. And what I will say, the more, and this is kind of intuitive, right? But the more digital our work is, right? So the more embedded we are in the digital stacks of our clients, that kind of 30 to 32% of our business, the much higher loyalty there is in that business. Very hard for them, for clients to move their businesses elsewhere. All right, so I guess the only other note here is where we add a lot of value to clients is where clients have a lot of complexity. So financial services represents just over 25% of our, sorry, just over 20% of our business. And you think of the complexity in financial services and the regulatory environment there, and there's a ton of value we can bring to help them simplify that complexity. I would say the same with healthcare and consumer health and energy, et cetera. Okay, highly regulated environments, or regulatory environments that have a lot of complexity. That's where we are unique relative to our competitors. Next slide, James. Just going to bring this a little bit to life in terms of how we manage that workflow and the platform we built. So we built a platform, we call it DCMFlex, and it's named appropriately because it's a very flexible digital stack. It's based on an API architecture. As you can see in this slide, we've got 70 software solutions that we have connected together that can meet any workflow need a client has. Obviously, clients aren't using all 70, but depending on the client's needs, we will tune the platform to meet that workflow need. We've got a number of active clients there, over 100 active clients. We've got 230,000 users on the platform annually. That number's changed slightly in terms of daily users. We actually have over 10,000 daily users that are logging into the platform to manage their workflow, whether that's workflow into digital marketing solutions, whether that's workflow into print, or as I said, workflow into business process outsourcing. I'll give you a simple example. If you're a financial institution, you've got a couple of thousand branches, and you need work to get out to those branches, whether it's forms behind the counter or forms in front of the counter, pamphlets, brochures, posters, et cetera. We manage all that workflow through this platform. So an administrator would go online, order, and we would take care of printing on demand, collating, and distributing. So think of us as the kind of Vistaprint for enterprise. That's one kind of unique use case. Another example for you, just to kind of illustrate the diversity in the FI area, we do a lot of work with investment advisors. So the investment advisor groups, and you may be an investment advisor with a couple thousand clients, and maybe a couple thousand clients you're prospecting, and you want to individualize that communication. It'd take you a long time to write 4,000 emails. We automate that process so it looks like it's individualized communication coming from the investment advisor, yet it's all automated. So a couple of different examples. I could give you 100, across the different clients that we've got, but it's a pretty cool technology stack. And you can see on the slide here that recently we're winning a lot of RFPs, and all of those wins are due to the technology, the digital solution we're bringing to clients. Okay. This is our strategy here. It's pretty clear. We've got a 32% penetration. So 32% of our revenue, if you will, comes from digital first, right? Automating that workflow. And our plan is to take that north of 75% by 2025. It's obviously a new territory, a new strategy for us. Since I joined the company, we were thinking very much like a print company, and now we're thinking very much like a digital company that automates workflow. So I can tell you the conversations that we're having with clients are completely different than they would have been a year ago. Okay, so that's that center bubble. I'm going to quickly move through the third, which is our digital asset management platform, if you will, or business that we're standing up. Just a little bit of information on the digital asset management market. I want to step back up one layer above and talk about marketing technology. So marketing, I was a marketer for many years. There's a ton of solutions to help marketers simplify their processes and manage their workflow. In fact, the MarTech software business is over $100 billion in revenue annually and growing fast. The digital asset management solutioning or software business is about 5.2 billion of that 100 billion. So sizable and growing super fast. You can see the numbers here. Depending on what source you look at, that market is growing anywhere from 20 to 30%. And why is it growing so quickly? Because only 1 in 10 companies out there actually have anything that resembles an effective digital asset management platform. So a lot of companies still using SharePoint, using Dropbox, using WeTransfer, and using hard drives. We know that none of those are effective in managing the sheer number of assets that are being created today. Okay, hence this business has been developed. Just go to the next slide, James. So that's a little bit about the market. So why DCM? Why do we have the right to play here? And I call this an inside out strategy. This is, not something that we don't have experience in. Actually, for 40 years, we've been managing digital assets. In fact, we were managing digital assets before the acronym DAM was even created. Okay. We needed to. I mean, in our business, 40 years ago, all that workflow became digital. So we needed to figure out how to manage those assets for clients so we can convert them into print, right? So we actually built our own platform, 40 years ago to manage all that complexity. And every single day, literally, we're managing thousands of assets on behalf of clients every single day. We wouldn't have a business if we didn't know how to manage them. So that's what I call an inside out strategy. We've got the practical knowledge. In fact, we're probably the best practitioner out there in the space. And then we've got the technology capability as well. We built the DCMFlex platform, so no problems for us building a digital asset management platform as well and bringing that asset management value to clients. Okay, so a combination of practical and technology experience. We think it's by 2025, literally the next couple of years, will define total market size for us or total opportunity for us. We think it's somewhere between a $25 and a $50 million business. We're very active with clients right now. We have over 40 active conversations. We got 60 sales reps that are out there supporting our 250 enterprise clients. We got 40 active conversations. We know we're going to be converting those over time. And we think it's going to be a business that's going to be kind of north of 25 million. The next year or two will define the total size of the opportunity over time. Okay, so we're really excited about this space. And this is all ARR. This is all annual recurring revenue. Okay, with high margin, obviously. Go to the next slide, James. I'm going to flip it over to James now. Let him talk about why we're where we are from a growth and from a finance perspective. James.
Thanks, Richard. And we've shown revenue on a quarterly basis here over the past almost 3 years. We're in the process of closing Q4, and we'll be reporting our Q4 results on March 21st. But what you can see is a bit of a fairly steep fall off after Q1 in 2020, and that was really when the COVID impact started to hit our business. But since that period, we've actually been fairly stable, and our production revenue, which is our core business revenue, has actually been growing within our consolidated revenue. So we're very pleased with that. We certainly benefited in 2020 from some COVID specific projects, but we've now really kind of worked through those, and we think we've got some good momentum going into the fourth quarter, which is typically stronger than the third quarter, and then the first quarter is always our strongest quarter. So we think we've got some good momentum in the business. You can see our gross margins here. We've really been leaning hard on the operational efficiencies side, and we recently closed 2 plants in Canada, one in Edmonton and one in Mississauga, Ontario. And our margins have been stabilizing closer to that 30% range. We expect to see that continue going forward, and are exceeding our kind of publicly stated markets guidance is to grow our gross margin to between 35 and 40% over the next 5 years. We've made significant progress in paying down debt. Debt is approximately 54% lower than it was at the end of 2020. And this is from a number of initiatives, both changes in the way we've done business with some accounts historically and how we charge for that business, but it's also really improving our working capital. So we're sitting, right now around $36 million, and we've got a pretty aggressive timeline in order to pay down our debt. This table shows some of the various term debt maturities that we have outstanding. We previously had a facility with Crown Capital, which was a subordinated debt facility, was approximately 12% coupon. We refinanced that in kind of a combination of 2 facilities in November and December. And you can see the amortization of our credit facilities here over the next 5 years. Assuming these all flow through nicely, we'll be virtually debt-free by 2026. Got a summary here of our capitalization. Share price recently was about $1.34, so we're about a $50 million market cap. We can see our kind of debt and other liabilities here for an enterprise value of about $150 million. It works out to about just shy of 4 times EBITDA on a trailing basis. We've got strong shareholder representation at the officer and director level, and retail and other shareholders represent about 46% of our shareholdings. Here's a summary page that really kind of shows how we see our valuation journey. We're currently trading at about 3.8 times revenue. When we look at conventional print solution providers, they're trading at about 7.2 times EBITDA. And as we move along that technology spectrum, we look at tech-enabled marketing workflow providers. They tend to trade at about 11 to 12 times EBITDA or 1.7 times revenue. And as we accelerate our DAM technologies and we develop those further, we hope to get a little bit higher multiple on that. You can see that they're trading at about 26 times EBITDA, and they tend to trade broadly kind of 7 to 10 times revenue. So we think even if we were able to kind of move the dial to get more fairly valued as a conventional print solution provider, there's some good upside in our share price.
Yeah, so so why invest? Obviously, pretty clear. I think we certainly had good margin growth. We say we've been building a better business. Well, we work to build a bigger business. So good, solid growth in gross margin, in EBITDA, and big improvements in our financials as well. As James mentioned, I think it's our lowest debt we've had since we went public in 2004, and you saw that debt sort of repayment curve. So I think we're well positioned for continuing to build that better business, and now positioned to build a bigger business as well, strategically clear, and also picking up some tailwinds in the market with COVID kind of at our back. Good opportunity for value creation with our tech-enabled workflow and what we're doing with our ASMBL platform. We're crazy low in terms of a multiple, and we know there's opportunities for value creation there. And as already mentioned, kind of that debt curve. So that's certainly why I've invested. I think we're well positioned for success in the marketplace, and we're happy to connect with tell your story today. Okay, so now we'll turn over to any questions.
Hi, Richard. I don't see any questions at the moment. We can wait a few minutes if there's anything else you'd like to share.
I think I'll just give you, I'll talk a little bit and see if any questions come in. Look, we're going to be announcing our year end and our fourth quarter in about 2 weeks' time. So I can't say too much about it, but I can tell you, as James kind of alluded to, that the story that we delivered in 2021 was very much a two-half. It's a year of two halves. I joined the 8th of March. Actually, today's my anniversary date. Just thinking about that. We spent a lot of time, obviously, in the first half of the year clarifying strategy. Getting our all of our kind of clear goals in place and focused on where we're going to win and how we're going to win. Started changing the conversations with clients, and we saw the benefit of that in the second half, and we certainly reported that in the third quarter. So and one thing I know in my business, 36 years in business, is that momentum builds momentum. So I think I know we're in a kind of a solid momentum stream right now.
Yeah, so a question just came in. I can read it off if you like. What is the biggest gating issue to putting existing clients onto the new DAM solution?
Yeah, do you want to answer that, James? Or?
Yeah, we've been focused on marketing our DAM solution to our existing client bases, our existing clients, and we're getting very positive reception with that. Our focus is really at the present time kind of leveraging that, and as we build that out more fully, we'll start to an outreach for new logos and new clients. But because we work so closely with our existing clients already, we're very well integrated into their workflows. We're already managing, thousands and thousands of digital assets for our existing clients as it is. So they trust us and they know that we're responsible. Brand compliance and asset protection are very key for all our clients.
Yeah, it's a great question. For large enterprises, just given the sheer amount of complexity they have, think of a bank that has, multiple lines of business. And if they don't have a digital asset management solution in place, you've got, one division creating assets that the other division doesn't see. So a huge opportunity for value creation, for creating ROI improvements in their entire kind of workflow and the assets they're creating. But the complexity they have, it's just a larger, and longer selling cycle. So the gating issues for us is really just, working with the team to get them prepared, for it's not an easy lift, right, at enterprise level. And that would be the biggest kind of gating issue is just positioning them for success over time. Some haven't done it because they understand that it's a pretty heavy lift and significant complexity, but we're making great progress, with several clients right now on helping them get started, if you will.
Hey, Richard, I have another question for you. As it's your first anniversary today, what is your biggest takeaway after 12 months on the job? And what do you think the next 12 months holds for the future of the company?
Yeah, no, great question. I think, first of all, look, we've got incredible people. We're the largest, kind of communications workflow provider here in Canada. And we've gotten there for a reason. And it's because of the people, right? It's not the equipment that we have in our factories. It's really the team that we've built over time and the experience that they have in solving those problems for clients. In fact, we've got many examples where we may have lost the business to a client and they come back to us because they haven't been satisfied with the new supplier. So people, and the biggest, I'd say the biggest thing that we've had to do as a company is start thinking about moving, that point I said earlier, moving from kind of a print a workflow company or a print company to more of a digital first company, right? So changing the conversations with clients. And that's why we've actually had some very good success changing the conversation, driving that penetration of our DCMFlex platform, because now we're talking to clients about optimizing and automating their workflow versus just selling them print, right? So that has been, I'd say, it's been a big takeaway, a bit of a challenge. It's taken us a little longer to get there. I like to say we're a battleship, not a aircraft carrier, right? We can turn quickly, but it's taken us a while. We got 60 leaders out there in the field, commercial leaders out there, salespeople, to train them on how to start having more digital first conversations versus print first conversations. So that's what I'd say the biggest takeaway was in the first year. I know what I think the biggest opportunities. I know that we're going to exit the end of next year in a very different place than we exited this year, both from a revenue, from a client engagement, and from I'll call it a strategy perspective, right? We will definitely be much more entrenched on our DCMFlex platform. And I know we're going to have some good success on our, standing up our digital asset management solution platform. So, it's a journey, right? We're year one into it, but I'm happy to see the progress we're making as a team. Got a great team. Made a lot of changes. You probably, shareholders probably saw. I made a ton of changes when I arrived. By the way, I haven't brought any of my own people in, but I took, kind of 6 or 7, senior leaders out to optimize the organization and drive more productivity and decision making. So, a big kind of cultural change, but I'm really pleased with progress. I think we're off to a great start, and I know we're going to deliver, kind of solid success and momentum in 2022 and onward, right? So excellent question.
Thank you, Richard. I see another question here. You mentioned supply chain headwinds in your last quarter. Any improvements since?
Yeah, look, I mean, you know, I can't think of a business or a business sector or an industry that is not having supply chain challenges. Our biggest challenge is paper, is getting access to paper. What happened with during that pandemic is a lot of mills, you know, kind of shifted their paper production to more corrugate because of e-commerce, right? So there was still demand for the fine paper we use in all of our printed material. Yet the supply went down, right? So I'm happy to report, by the way, that we have not lost any opportunities because we haven't been able to access paper. We've got, honestly, I've worked, you know, 36 years in multiple countries and have had, you know, procurement teams work for me in the past. We've got the best procurement team. These guys scrape every corner of Canada and every corner of the world to find whatever they can get to be able to run our presses and meet the client's needs. So we thought, you know, we've lost nothing. You look at our revenue flow in the final quarter or final kind of half of the year and how we're progressing. But it is a challenge, right? It's sort of a 24/7 job to get and to procure the raw materials we need to be able to meet the needs of our clients. But I'd say we're super successful, and I'm not overselling that. We are. In fact, we've picked up jobs from other companies that haven't been able to procure paper. So we've done a nice job there. And of course, we're getting hit with some headwinds on pricing. And we're moving, you know, most of our contracts, our long-term contracts, have raw material indexes built in. And we're obviously passing that price increase through to our clients, no different than, you know, most companies are doing now with the volatility and the dynamics that are happening in the marketplace. So don't think, yeah, there's definitely challenges, but I can tell you that we're, you know, well positioned to not only, you know, kind of navigate through the challenges, but even take advantage. And we've got some recent success or recent wins as a result. But it's a lot of, you know, sweat equity from the team, you know, the procurement team, the operations team, and the pricing team, right? Just to make sure we're on top of this stuff every single day.
Great. One more question, follow-up question. Did the Mississauga plant closure go well and on schedule?
It went brilliantly well. Great team that executed that, and it was bang on schedule. We said we're going to close by year end and move, consolidate that into our Brampton facility, and it was completed and closed by year end. And we didn't miss a beat. We now have, you know, when we walk out into our facility in Brampton, I think we've got every piece of kit that is, I was out there the other day, every piece of kit is running right now. And yeah, it was a very well architected and executed transition. And, you know, we're great at project management for our clients. And, you know, we just extended that project management capability into our own, you know, consolidation program. So yeah, great question. And we've delivered exactly, you know, what we communicated to shareholders.
Great, thanks so much. We have time for one or two more questions if there are any. Otherwise, I think we are done. Richard and James, thank you so much for your time and for your presentation.
Thank you. Appreciate it.
Thanks.
Thank you, everybody.
Have a good day.